Gold, 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 gold. What are we going to do here? All day today, the gold price was toying with gold investors. It was teasing us at $1,900 per ounce. It touched just a few times throughout the day and ultimately closed just under 1900. So the big question on every gold investor's mind right now is number one, is this recent rally overextended? Are we premature in looking at this as a good sign and bracing for impact, ready to get smashed back down again? Or is this a good sign? Are we turning the corner into a new, sustainable, solid, and exciting bull market in gold? And ultimately, on the backs of all those questions, really everybody's wondering, why is gold going up and why now? Ready? Let's dive in. If you haven't already, I would love it if you would join me in my new community on Locals, where I post exclusive content just for supporters that I cannot post anywhere else. I say stuff that I cannot say anywhere else. Number two, I would love to invite you to join me in Dallas on March 5th. I will be speaking at an event there. If you'd like to join, I've got the sign up link in the description below. So number one, why is gold running and why is it running now? Well, the number one thing that people are going to be pointing to right now is obviously going to be the tensions between Russia, Ukraine, and the United States. And everybody's looking at that as escalating more and more and more, as it seems like there's a continued media blitz of information and news saying, hey, these tensions are escalating. And that has, at the same time, we've seen gold going up. Now, I have to pause about this and say that, number one, you can never really, for sure, ascribe a reason to why something happens like this. We have this narrative bias. Nassim Taleb talks about this a lot in his book, The Black Swan. Highly recommend that book. It's one of my favorites. He talks about the narrative bias, that our brains are hardwired to look for the story, to look for the pattern, because for all of human history, that's how we've survived as a species. But it gets us into trouble sometimes when we notice patterns where there aren't any patterns. When we use that narrative bias to say, hey, this happened, therefore this happened, and where that's the it's correlative, not there's correlation there, but no causation. And so it's very possible that escalating tensions right now geopolitically are also causing big investors to pour money into gold. But it's also possible that part of that is a self-reinforcing prophecy there, where everybody expects that some money will go into gold because of the tensions. Therefore, they buy gold, and that drives the price up anyway. Now, the reason why gold is at the center of this and not some other assets is because gold, from a geopolitical perspective, is the only asset that is not at the same time as somebody else's liability. It's not like debt, like sovereign debt, like a lot of countries hold bonds from the United States government. That means the United States government owes dollars to the rest of the world. Now, if push comes to shove, the United States can always just say, nope, we're not going to pay you. And so in times of increasing geopolitical tensions, especially with quasi-enemies there, where you're not really allies, but you're not really at war, these things get a little bit more pronounced, and fears of default, or whether it's chosen or not, they get heightened. And so investors will flock to safe haven assets that don't have that capability. Now, I want to also make a good point here, that if you don't store your gold yourself, if you've got your gold stored by somebody else, there's counterparty risk there. It's somebody else's liability. You're relying on that person, that company, that entity, that country to give you the gold if you ask for it. And so that's something to be aware of. It's not a game changer because different forms of gold ownership are very appropriate depending on what your goals are. For instance, if I want to eliminate counterparty risk completely, I've got to hold the gold myself in my hand. If I want to have assets waiting for me in another country just in case I need to flee and I need wealth waiting for me there on the other side because I'm not going to be able to escape with it, then that's a situation where storing it and trusting a third party, a private vault in a different country with a high degree of economic freedom, those kind of things, allocated, segregated, insured, all of that, those things become very important because different goals, right? So depending on what your goals are, there are different opportunities available, all within the sphere of gold and precious precious metals ownership. Now, some of the other reasons that gold is rallying right now, one of them is going to be the Federal Reserve. We're continuing to see more and more fears of the Federal Reserve selling more quickly, raising rates more quickly, and those fears, those deflationary fears of tightening. So you might be asking, well, why is that pushing gold up? Because we've had all this inflation for a while now, and that didn't push gold up. And now that the fear is like deflation, why is gold going up as a result of that? Well, number one, even in the most deflationary times, gold does very well. Look at the Great Depression, and subsequent to that, the gold did extremely well. Yes, that was forced onto it by the government repricing it upwards, but you get the point. Whether it's deflation or inflation, gold tends to preserve its purchasing power. But we've had the inflation recently, and it hasn't gone up, and that's because gold is more forward-looking. Investors are anticipating the future. So gold is moving down as investors anticipated the deflation the Fed might cause, and the moment that the Fed actually started the taper of their asset purchases, what happened was gold bottomed, and so now investors are more fearing what's going to come after that because the deflation or the taper has already been priced into gold. And so the things that are being priced into gold now are the future, what comes after that when the taper fails and they have to start QE up again. Now, regarding the recent rally over the last couple of weeks, I would say that it's very possible this is overextended. I'm not getting too excited here yet. I'm not expecting a smash down. I'm not expecting new lows. I'm not expecting to break the trend line that we've held for years now. What I am expecting, though, is a pullback. I would not be surprised at all. We're encountering some heavy resistance here at 1900. We smashed through that 1860 mark very strongly. I wouldn't be surprised at all to come back down and retest that. Even lower than that at 1830, which was a huge resistance level for a very long time. That would not be surprising at all to me. In the meantime, what I am expecting over the next couple of months to 1 to 2 years, gold miners, I anticipate to do extremely well here. Most mining companies, most exploration companies and producers, they're basically being priced by the market in anticipation of a big drop in the gold price. The reason for this is because the gold mining industry wasn't the best at managing their cash flow for a long time, especially in that last gold bubble around 2011. They burned a lot of investors, so investors are scared and don't want to pour their money in. That has resulted in their prices being suppressed, resulted in their share prices being very low, to the point that the share prices are pricing in basically a big drop in gold. Many of these large producers as well are profitable at gold at $1,700, $1,600, $1,500, $1,400, some of them even down at $1,200 or $1,100 an ounce. Now, as energy costs keep on going up, that will change as well. If oil, let's say doubles, then that's going to impact the profit margins of a lot of these gold mining companies. However, the price of gold going up has a disproportionate effect on the companies, because if the company, for the same amount of work, can sell something at 20% more, 30% more, 40% more, that makes a huge difference to their bottom line. Because if it costs the company $1,500 to get it out of the ground and sell it, and they're selling it for $1,800, well, if gold goes to $2,100, they just doubled their profit margin. And as it becomes more apparent that gold is in a new bull market, and every time it drops far less than where it was before, and every time it rallies, it starts to make new highs. Right now, it's at an 8-month high. Soon it could be at a 1-year high. Soon it could be at an all-time high. As that becomes more and more apparent, that will start to get the attention of investors, and that will start to get the attention of big money that will start to look at these miners and say, hey, there's some deep value here. We can buy this. We can sit on this. These are cash cows, cash machines, and it'll start to get the attention of investors, pushing share prices up. You know the drill. This is not financial advice. It's not an investment recommendation. Do your own research. That's what I'm looking at right now, and I'll let you know if I change my mind. As always, really appreciate you guys. Thanks so much for watching. Have a great day.